CapeTalk on Mondays round about this time. We talk money on a Monday. We are joined again by Neesa Moodley, personal finance editor at the Daily Maverick. Neesa, I hope you've been well. Good morning.
Morning, Lester. How are you?
Very good, thank you. This morning we're talking about RSA Retail Savings Bonds. Currently, I've just been going over a passage over the week and how surprisingly South African retail bonds are doing surprisingly steady despite load shedding, despite a lot of political tumult. This is essentially what retail bonds do. They remain steady. They are low risk investment, and is that why we're seeing some steady growth? I'm reading something about just over 11% return on South African retail bonds at the moment.
Yes. So the returns have just been updated as at Saturday from the 1st of July. And if you take a 5-year fixed rate RSA retail bond, you can get a return of 11%, which is really, if you had invested last week, Lester, before the 30th of June, you would have got an 11.75% return on the 5-year bond.
With steady returns and a low-risk option, why are they so underutilized?
I often ask that question myself. I think the reason is because it's marketing. The RSA retail bonds, you buy them from National Treasury. So when you're getting personal finance, when you're getting advertising from companies, investment companies, they're not really going to tell you, or even banks, how the RSA retail bonds compare, because it's not a commercial investment. It's you're investing with the government.
And with the negative perception that we currently and generally have over our current political situation, or whether it's our infrastructure situation, largely driven by the politics and policies around it, or if I'm not going to be feeling too good about our political situation, not going to be feeling too good at investing in government retail bonds. Yeah, it's about public confidence.
So the funds are used to fund general government spending, like education, health, and infrastructure. And that is exactly the thought I had. I thought, with all the corruption that's going on, why would I put my money in there? Because then it's just going to be stolen and used for nefarious means. But I think the steady returns are based on the fact that the money is invested with National Treasury directly. It's not going into the government departments where the corruption is happening, which is why it is actually a steadier, safer investment. And the other thing, Lester, is that you don't pay any fees, or you don't pay any monthly admin fees, and there's no percentage cost. There's no commissions, there's no charges payable when you take out an RSA retail bond.
In years gone by, I've seen some marketing, some advertisements at the local supermarket, at the big retail store, at the money market kiosk, where there'd be either a poster or some sort of pamphlet saying, well, invest in SA retail bonds, inquire here. I haven't seen as much in recent years. Where are people having to go to invest? Or are they going largely through the marketing of the investment firms that I have seen just over the last few days? And as you said, we've seen a lot of that over the last few days of investment companies putting this out as options as well, or reminder to people of these as options for investments as well.
I think the point of sale, or the initial point of contact, used to be traditionally the South African Post Office. And as we all know, the Post Office is in its own kind of kettle of trouble at the moment. So if you want to invest in an RSA retail bond, I think the quickest, easiest way for most people is to do it directly via National Treasury. So there's a website, rsaretailbonds.gov.za, and if you go there, then you can invest directly online, and you've got to send through your paperwork.
Why would you? You're this is not financial help, but this is your experience as a personal finance editor. Run us through some of the advantages, disadvantages when it comes to SA retail bonds.
So I think the advantage is that, I think any product, financial services product, or savings product, where you are not paying any fees, commissions, or charges, means that everything you are putting in, you are basically getting a return on, which is great, right? That's what everybody wants. You want to see as much of your money there you're sitting aside earning a return, rather than you putting in 1,000 rand a month and actually earning a return on maybe half of that or 80% of that. There's 3 different types of retail bonds that you can get, which is quite interesting. One is the fixed rate bonds, and that's got a 2-year, 3-year, 5-year investment term. Then you've got the inflation-linked ones, which is really good because it's adjusted for inflation, and then you earn a return over and above that, which means you're beating inflation with those ones. And then last year, Lester, they launched something called a top-up bond rate, which is quite nice. It's got a 3-year term, and you can continue to contribute, because the fixed and inflation-linked, you had to make a once-off contribution, and you couldn't, once you made your once-off contribution and you opened it, that was it. It was fixed, and you couldn't touch it again until it matured. The top-up bond rate that they launched last year means that every month you can invest from as little as 100 Rand a month.
Neesa Moodley, she's the personal finance editor at the Daily Maverick. 021-446-0567. Really appreciate your time. We talk more about money next Monday.